Welcome back, fellow value investors. In this video, I wanted to go over one of the value investor lessons that I think we could all appreciate that we've witnessed over the last 16 to 18 months. Often, a stock, a company you believe in, really goes down in price and it keeps going down. And there's lots of bad news on the stock. And boy, it's really tough to keep your head in that particular investment. Your gut's telling you, why is it going down so much? Am I wrong in my analysis? And I wanted to go over a few examples that hopefully remind you, and they certainly remind me, to really do your analysis and then have some conviction. Value investing is about buying something that is unappreciated, oftentimes undesired. Everybody hates it. And in a year or 2 years, things change, and then everybody loves it. Next thing you know, you've doubled, tripled, quadrupled your money. That's value investing. So let's go over a few examples where this played out, and one example where it's currently playing out as proof points for this valuable lesson of not selling your stocks when they're heavily discounted and you believe that company is worth a lot more. The first example that I'm going to go through is for Meta, and this example really played out. If you follow the stock over the last 2 years, in 2022, it seemed like everybody hated Meta. It went down 76%. The metaverse was a big disaster. People were questioning the company, all kinds of bad news. And it was easy to go along with the crowd and probably lose your faith in Meta. But what happened really at the end of 2022 is the stock started to go up and went up 268%. This was a huge winner in 2023. And it goes to show that the same company that was trading under $100 a share is not trading above $300 a share. Just amazing. In less than 14 months that occurred. So this is an example of how an investor that really believes in Meta, really believes that they're a value play, especially when it got down around $100, $150 a share, really made out and really followed the principles of value investing and made a great return in 2022. The recipe for being successful when stocks are really sold off is doing your homework, really believing the numbers. Here's the analysis I performed on Meta, April 27th, 2022. There's a video on my channel if you'd like to view it. And I had a value of each share at $292 per share at that time. As mentioned, the stock got so low, got well below 292, and it was a great buy. I ended up buying shares of Meta. I would probably think I didn't buy enough, but really the recipe for being successful when you're seeing a stock really go down, really get beat up, is to do your analysis and really believe in your analysis. So I just talked about the past and how Meta really rewarded value investors, but let's talk about the present. The company I'm going to talk about is Medical Properties Trust. And this company is heavily sold off. The symbol is MPW. I've done videos on MPW, and the company produces cash flow enough to pay all their bills and pay off a really high dividend. Their dividend's almost 13%. And overall, I think that they have the operations and the performance to exist for the next 10, 20 years. So the short sellers, I think, are going to be in trouble if this stock ever takes off. Very similar to Meta, this stock's been just going down. It is hated by many, misunderstood, undesired, unliked. But as I do my analysis on this company, I'm really sticking to it, and I continue to buy shares in MPW because I think that the stock at some point is going to start to go up. If I have to wait a while, I'm getting paid 13% dividend on this stock. So it's a pretty interesting proposition that I'm willing to invest in. Based on my analysis of MPW, they're being discounted by 50%. And I go very conservative with my analysis. For example, I use a very high weighted average cost of capital. I really take modest numbers and put them into my model. So overall, I've done my homework on MPW, and I'm willing to invest my money in this company because I think if it pays off, it's going to double or triple my money very quickly. Holding on to a stock when it's been really, really beat up and the stock price is down 80% is not easy, not even for a big hedge fund manager like Bill Ackman. He sold his stake in Netflix, which he entered into the position with a lot of press. And boy, he came in looking like he really knew his stuff, and he lost a lot of money. If you follow the Netflix stock, it was doing great in 2022. And then it had this steep drop from almost $700 a share down to $200 a share. This is the #1 streaming company, and it was beaten down by 73%. And then it picked up and went up 173%. And Bill Ackman exited position, kind of on its way down. I would also say that when he left, it forced the stock price to go down even further, since he's such a well-known, hedge fund manager. It caused more downward pressure on Netflix. But this stock was a big winner. I bought near the trough and really saw my investment go up quickly over time. Here's another example of how, if you look at a company that you believe in, it's been heavily discounted, it's a good stock to invest, but just be aware that sometimes it's tough to stay in there. And Bill Ackman is evidence that even a big hedge fund manager that has multiple analysts working on the analysis, and he couldn't handle it and he exited the position. In every market, whether the overall indexes are up or down, there are stocks that are heavily discounted. Every single market. It depends which sector is really popular and which sector is really disliked. And as I showed you with MPW, that sector just is not liked. Real estate has been down the whole year, and so has healthcare. And MPW, by the way, is a real estate investment trust in the healthcare industry where they lease out space to hospitals. So they have really seen their stock go down, and their stock price is heavily discounted. Now, I don't know if my expectation that the stock's going to go up is ever going to happen. I may lose all my money on MPW, but I may also double or triple my investment in MPW. And I have to trust in my analysis. And if it's right or wrong, I'm always going to learn something from it. I certainly learned a lot from investing in Meta, and it really played out, and it ended up being a real positive winner. But it was tough when Meta was down so much. I really was questioning myself to some extent because I had put a lot of my capital, a lot of my hard-earned money into Meta. Netflix was kind of a quick turnaround story, but again, I had to really believe. I believe in Netflix. It's a #1 streamer. They're such an innovative company. So when it was heavily discounted, I could not resist, and I put in a really nice position in Netflix and made a really nice short-term gain. I actually took about 90% of my position off the table on Netflix and realized that gain in 2023. Continue to own some shares in Netflix. But that was another example. Those two examples kind of give me the experience to really hang in there on MPW and other companies that are heavily discounted at this time and are just really unpopular. I hope you found the video interesting. I'd love to hear your comments on how you hang in there on investments that you believe in and become a long-term investor, really expecting that that stock will someday rise because it has the right fundamentals. It produces free cash flow. It grows revenue. It's profitable. And those things really matter over the long term, over the long haul. Thanks again for watching. Good luck investing.